From FS Securities, we are an education and information company located on the Gold Coast in Queensland, Australia. Every morning we actually put on the website www.fssecurities.com a lot of information about what's happening in the market. We give you daily briefing, a lot of daily recommendations, a lot of research, a lot of scanning of the markets, and also from time to time we give you a lot of recommendations on a particular stock. Today, the 14th of July 2020, we are actually focusing on a company called AfterPay Group. The code is OPY and depends on the platform that you use. It could be OPY-ASX, it could be .ASX, or it could be .AS. AfterPay Group uses more or less the same model as a company that a lot of investors and traders have been following of recent time. It's called AfterPay. AfterPay before the coronavirus was trading around the $32. It dropped by 50% down to $16 during the coronavirus, and today is trading around 70 Australian dollars. AfterPay Group use the same model, or very close to the same model. It's about buy now and pay over installments. It's a secure system. Some of those who are like me, grown-ups, we call it lay-bys. What is different between the current lay-by and the previous lay-bys? Well, that's a good question. However, this is a company into this industry, and because of the hype in the market, in technology index or technology sector, it's going higher and higher, but yet to make any profit. Okay, so we start here by telling you this trade is only for aggressive traders only. It's trading at the moment at 28 cents, and we think it is possible it can go up to 45 cents, subject to the hype that exists in the market continues. However, you must put a trailing stop loss, and we think that the maximum stop loss is around 20%. So should you go in at 28 cents, the worst scenario is you should be out at 22 cents. Because it is actually a trailing stop loss, if the price goes up above 28 cents, that stop loss will also go higher. Obviously, we hope that it will go high enough that the trailing stop loss will get you out if it drops to be above 28 cents, subject to the current movement. At the moment, our mechanical system that we have designed for investors and conservative traders, aggressive traders and very aggressive traders, and of course all of them have got different time frames. At the moment, they're all neutrals. Not bearish, but not bullish, but neutral. So what does it mean? Well, for the investor who actually buys and holds in the bottom drawer for many months, maybe years, wait. The conservative trader and the aggressive trader and the very aggressive traders, the punters, may decide to speculate on the market and move ahead of the market movement and ahead of the indicators that we pick up from the charts and moving into the market. So the two bobs worth. This stock turns over $14 million. Not a great deal, and yet to make any profit. Is it going to make profit in the future? That's a good question. Only $35 million in assets and only $8 million in cash. Only a hype in the market, we may see a major increase in the price. As a matter of interest, that price actually moved up by 25% this week. Okay, let's have a look at the balance sheet and see how strong it is. Cash, 8.7 million, ahead above what it ended up in June 2018. I'm waiting to see what is the cash equivalent in June 2020. Obviously, some people in the market know before me or before you, and we will see at the moment what happened to the price, and the price will indicate the expected return that the market expect from this particular stock. Okay, liabilities higher than the assets. So really, the stockholders' equity is negative. So we need to see much higher revenue, much higher return earning, and hopefully that will exceed the debts, reduce the debt, and hopefully that will turn positive. Okay, now in terms of the revenue, as I mentioned, 14 million, and it made $26 million in loss. That is before interest, tax, depreciation, and amortization. So the price earning will tell us a bit more about what we expect from this company in the future. Remember, all these figures happen to be not as recent as June 2020, but before that time. All right then, well, we can see that the company, based on the number of shares and the price today, $374 million. There are a lot of information not available because it's only recently listed. As you can see, I don't have enough data here. I don't have enough 50-week. But look, you know, the market somewhere here was around the $3, went to $3.50, and was $2.80 at one stage when we looked at the market, and then at the moment is trading around the $3.96. This was done several days ago. Looking at the weekly charts and looking at the indicators, the parabolic stop and reverse, you can see here the dotted, those dots, the red dots, they happen to be below the candles. Green candles meaning bullish, meaning it's up. Red candle means bearish, down on that week. And the parabolic stop and reverse happen to be below the candle, that's bullish. The stochastic, the blue line is above the red line on the upside, that's bullish. The 9-week above the 21-week, that is actually bullish. Looking at the daily, the 9-day moving average above the 21-day moving average, bullish. Parabolic stop and reverse, those dots, bullish. However, the stochastic happens to be bearish. The blue line is below the red line and on the downside. And what we've got here is the 50-day moving average above the 100-day moving average, that's positive. However, the 50-day moving average below the 200, which is bearish. So I get, you can see that this company on technical, you may see some light at the end of the tunnel, having had a very good week. As you can see, several weeks from $1 to 4, 6, 8, 10 weeks from $1 to about nearly $4.50, but then down again. Is it going to go back to $4.50? Well, obviously that's a good question. The MACD, that's another indicator. Moving average convergence divergence, that's bullish. The blue line above the red line, bullish. DMI, directional movement indicator, is bullish. And the RSI, bullish as well. So all the indicators at the moment for the short term showing a very positive trend. Fundamentally, it's not a very strong company. Fundamentally, it's not making any money. Technically, because, by the way, on the technical issues, there are some information that is provided to insiders, and insider would know something before you and me. But look at the volume. When the prices started to go higher, the volume started to go higher. and then it had one particular day with actually people were taking money. Well, wouldn't they if you were actually in the market at $2 and the price went up to $4.50, then obviously you need to sell some and take some profit. And at the moment the price is starting to go higher again. So that's a good sign at this stage. And what you need to do is go into Yahoo Finance or look at any platform that will show you the charts, and look at this particular company, OPY, and see what it's doing from day to day and build your confidence around it. Okay, I mean, Morningstar quantitative ratings, they reckon the company is worth at least $4.3, trading at the moment at $3 below, well below $4. Very highly liquid. Obviously a lot of company, the speculators are in. And you need to also go and check this announcement. They had an investor briefing on the 10th of July, which excited the market. So that's some good news came out from the directors. Now the expert criteria, the revenue growth, they expect the growth to continue. So there is a pass here. However, quarter earnings fail. Debt to equity, I don't know why it passed when it's got more debts than equity. No dividends. Cash flow per share is negative, so really it's actually suffering from cash flow at the moment. Okay, the oscillator, overbought. The trend is neutral. Volume is high. Well, you must understand that when the volume is high and the price goes up, those people in the know-how have a lot of expectation based on rumors or based on facts. At the moment, we don't really push for any buy or sell or hold. It depends on you. Finally, all I can say is that this is actually a recommendation for the very aggressive trader. And remember, everything we put on our website is for general advice only. We don't know your financial circumstances, so obviously you need to consult with your professional advice and make your own decision. The first thing you need to do is determine your risk appetite before you enter the market. Okay, all good for you. Hopefully you make some money out of it.